All right, we've got your June 2024 Edmonton housing market update, looking at the most recent statistics available from the Realtors Association of Edmonton. So that's looking at the May stats. We're going to be looking at all the different segments of the market, including detached homes, townhouses, apartments, semi-detached homes, and I'll also be digging into the benchmark pricing for each one of those property types. All right, let's jump right into it. Okay, let's look at the market as a whole. So this is total residential. That includes everything in Edmonton kind of smushed together, all property types. It's useful for just kind of seeing generally what's happening in the market, but not as helpful as when we dig into individual market segments and property types. That'll be more relevant to you, but it's still good nonetheless to look at. So the absorption rate for the market as a whole was sitting at 51.4%, which is still seller's market territory, but a weak seller's market. It's basically just on the cusp between balanced and sellers. That did drop in intensity a little bit from the month before. The April stats, we were at 57%. And I did notice that out in the market working with clients, still very busy, but it wasn't quite at the same feverish pace as it was before in terms of how quickly properties were going, how many offers they were getting, and how much over list they were going. You're still seeing a fair amount of that in the last month, but it wasn't quite as intense as April. Now, the average price for the market as a whole was sitting at $416,567, which was still up from the month before. It was up 1.37% from the month before, and the month before it had gained 3.55%, and in March it had gained 4.29%. Prices have still been going up, but again, not at the same intensity as they were the last kind of couple months. Now, in terms of the actual inventory, actives and solds, at the end of May, there was 4,187 active listings, which was up 11.89% from the month before. Still down from last year, down 18.8% from last year. And the sales were up just a little bit from April. They were up 0.09% from April. So pretty much the same pace of sales for the market as a whole. And that's still a significant increase from the number of sales last year. That's 19.56% higher than last year. Basically, the number of sales is kept up, but the inventory is starting to pick up a little bit. That's what's caused that small shift. It's not like less people were buying. Same number of people bought, but there was just more active listings, so that can start to affect the market a little bit. Generally, there's a lot of sellers that are a little slow to get their properties on the market. Like the early spring, there's a fair amount of stuff that comes on, but there's a lot of buyers at that time. And some people don't get their properties ready till April, May, June, July, or even later sometimes. So usually inventory will start to pick up as we get closer to the summer months, or actually in the summer months is when it often peaks. Average days on market was sitting at 32 days on market versus 34 days the month before. So it shaved a couple days, but still relatively similar. And then the market segments, 17.2% of the market under 200K, 14.7 between 2 and 300K, 20.5 between 3 and 400K, and 22% between 4 and 500K. So that's the most popular segment. Then between 5 and 600K, it was 13.2, and then a measly 6.1 between 6 and 700K, and 2.6 between 7 and 800K. After that, you're looking at pretty small numbers. Now let's move on to the next section. So we'll start with the benchmark price for composite homes, since we were just looking at the market as a whole. Benchmark price in May 2024 was sitting at $392,200. This has not quite reached the peak of April 2022, when it was $407,300. So we still have a bit of a ways to go there, but this is taking in the market as a whole, and you'll see that the story is a little bit different in some of the other market segments. So that's what prices have been doing for the composite price. All right, detached homes, everybody's favorite market, hey? Now the absorption rate here was sitting at 52.77%. So again, it is seller's market territory, but a weak seller's market. And that did also drop a little bit from last month when it was at 58.7. So it has shifted a little bit, not quite the same intensity. Average price for detached homes in Edmonton was sitting at $543,527, which was up 3.25% from last month and up 9.13% from last year. So continuing to see gains in detached home prices. I wouldn't be surprised if that levels off once we get into the summer months, but we did get an interest rate reduction, and some people are expecting that to add some more oomph to the market. I'm not convinced yet. I'll believe it when I see it, but that's where we're at right now. Now, in terms of actives and solds, there was 2,131 actives at the end of the month, which were up 7.9% from last month. So again, you're seeing an increase in inventory, and down 28% from last year. And the number of sales was at 1,124, which was down 3.02% from last month, but still up 9.23% from last year. So you're seeing the sales have started to dip in May compared to April. Not a significant dip, but we'll see if that trend continues once we have the June stats. Average days on market was sitting at 31 days versus 34 days in April, so still stuff moving pretty quick. In terms of the market distribution, there's 1.18% below 200K, 4.44% between 2 and 300K, 19.36% between 3 and 400K, and 31.5% between 4 and 500K. So that was the most popular segment again. And then between 5 and 600K was 22.11 and 10.63 between 6 and 700K. Then we've got just 4.72 between 7 and 800K, and 2.43% between 8 and 9, and just over 1% between 900,000 and $1 million. After that, we're looking at pretty small numbers for those higher priced properties. All right, let's look at the benchmark prices for detached homes. All right, benchmark pricing for detached homes using the MLS Home Price Index. So this is probably the more accurate tool that we have for pricing, although it lags a little bit. I'll look at both 1-story and 2-story homes. The benchmark price in May 2024 for 2-story homes in Edmonton went up to $515,800. So we're getting pretty close to the peak pricing we hit in April 2022, when it peaked at $531,200. So we're just getting pretty close to that. And if we look at the single-story, single-family homes, the benchmark price in May 2024 was sitting at $408,900, and the peak in 2022 was $406,800. So based on this, you could pretty confidently say essentially prices have recovered to their 2022 peaks for detached homes. We'll look at the other market segments. Even with all those interest rate increases that took a bit of a smack to the market, it has come back in terms of pricing in Edmonton, and they haven't exactly reduced rates a lot. We've had 1/4 point reduction in the Bank of Canada rate. There's obviously been some moves in the fixed rates, but that does show you that it was able to recover without the rates going back down to where they were before. So let's go into the next segment. Okay, let's look at the semi-detached market. So this includes things like half duplexes and what we call residential attached properties. They're single family titled, so there's no condo fees, but you're attached to one or more other properties. This one is still in a strong seller's market, sitting at an absorption rate of 74.59%. Last month, it was actually at 72.96%. So it's actually a little bit higher than it was even last month, but the inventory has gotten very tight in this market. Average price is sitting at $426,229, which was up 3.88% from last month and up 9.01% from last year. Now, in terms of actives and solds, there was 307 active listings at the end of the month, and there had been 229 sales. So the number of active listings was actually the same from last month, and the sales were up 2.23% from last month and 21.81% from last year. This should go a long way towards explaining why this market is so tight. Like when you look at absorption rates like that and you see, like around 75% absorption rate, that's a pretty intense seller's market. But then when you go and look at the actual numbers of properties that are active and sold, there's 307 versus 229 sales. There was over 1,000 when we were looking at detached homes. So this is just a much smaller market segment, so it's a lot more sensitive to changes in demand or inventory. So if you have another 50 or 100 buyers that decide to buy a semi-detached home that month, that can create a big swing in the balance of that market. Same thing on the listing side. If 100 people decide to list their half duplex next month, then that's going to have a big impact as well. So it's more sensitive, so you can see a little bit more wild swings, but it's obviously stayed pretty tight since since February. It has been in seller's market territory and has stayed tight for a while. So that's what's going on in that market. Average days on market was sitting at 25 days. You can see that's significantly less even than detached homes. That dropped from 30 days the month before, so that also reflects how quickly stuff is selling. And just to give you a little bit more insight into that, when somebody writes an offer on a property, usually they're going to have conditions on that offer. So it's often going to be like a financing condition and an inspection condition. Those are kind of the two typical ones that you'll see on most offers. The days on market still keeps ticking even while a property is pending under contract, waiting to get financing approved and get the inspection done. So a property could be listed and it could get an offer in the first 2 or 3 days, maybe multiple offers, go pending, let's say on day 3. And then it's not unusual for that property to be pending for a week or 2 weeks. So you automatically add another 7 to 14 days to that. So a property that shows up as being sold with 10 days on market or 17 days on market, anything in there is something that more than likely basically got an offer within the first few days and went pending that quickly, even though it didn't show up as sold until later. So when we're looking at this average days on market at 25 days, you could almost take that number and subtract maybe on average 10 days from that. And that tells you that most properties on average are basically going under contract within the first 2 weeks. So it's not taking almost a month for them to get their offer. Like it's happening in the first couple weeks kind of thing. Hopefully that kind of gives you a little bit more insight on days on market. Now for the pricing distribution, 1.4% under 200K, 12.34 between 2 and 300K, 33.76 between 3 and 400K, and 37.83 between 4 and 500K. So even in this market, that's the most popular segment between 4 and 500K. Not too long ago, it was probably the 3 to 400K, but since prices have gone up, that chart will start to shift to the right. Then there's 10.24% between 5 and 600K. So it drops off a cliff after you go under 500K. I think a lot of people start considering buying a house once they get to that point, at least with today's prices. Between 6 and 700K was 3.14%, and then barely anything after that for higher price points. Now, before we get into the townhouses segment, I wanted to give you guys an opportunity to book a free strategy call with me. If you go to booktrevornow.com, you can select a time on my calendar and set up a free 30-minute real estate strategy call. You can ask me anything you want about real estate, whether it's buying or selling, specific questions you have about the process or the market, and I'd be happy to help you however I can. You can also reach me directly on my cell phone at 780-819-5508. Again, that's 780-819-5508. All right, let's continue. All right, row and townhouse market. This has been sitting at an absorption rate of 77.35%, which again is a pretty strong seller's market. It dipped down a little bit last month. It was at a whopping 86.56%. The intensity has dropped a little bit, but don't get me wrong, that's still been pretty intense numbers that we were seeing there in May. Average price for a row house was sitting at $281,817, which surprisingly was down from last month, down 3.52% from last month, but up 12.41% from last year. Later on, we'll look at benchmark prices for townhouses, but so far that's the biggest number we've seen in terms of average price increases year over year for May. And I noticed that the townhouse market really picked up in the last few months, where stuff that had used to be what would be considered overpriced all of a sudden looked like a good deal that was reasonable and people would buy it. And then the market basically caught up to those properties in terms of pricing. Now let's look at the actives and solds. So there was 437 active listings at the end of the month, and there had been 338 sales. The inventory has increased substantially. It's up 17.47% from last month, but the sales are also up. They're up 4.97% from last month. So both have picked up, but the new listings and inventory outpaced the new sales a little bit. So that's what caused that drop in intensity. Average days on market sitting at 24, so very similar to the semi-detached market, versus 30 days the month before. And then you can see these are generally cheaper than semi-detached properties, with 22.46% of the market under 200K and 33.31 between 2 and 300K, and the largest being between 300 and 400K with 36.29% of the market. After that, drops off a cliff and you got 6.57% of the market between 4 and 500K. All right, let's look at benchmark pricing for townhouses. Now, this is probably the most interesting one, because in May 2024, the townhouse benchmark price hit $254,100, which has actually surpassed surpassed the peaks that we saw in June of 2022 when it was sitting at $247,600. So the market's been quite hot for townhouses, as we just showed you. So it's not really a huge surprise, but we are on to new peaks, at least in recent memory, for townhouse prices in Edmonton. Lastly, we are going to look at apartments. This market was sitting at a 34.4% absorption rate. So if you've been paying attention so far, you might notice that is completely different than every other market. That is in balanced market territory, but it's still more on the buyer side of a balanced market. So usually in a balanced market, you're not going to see a ton of price growth, but you're also not going to see a ton of price reductions or or dropping. It stays a little bit more level when it's balanced. This is a little bit of a drop from last month. And last month it was 35.99%, but still pretty much on par. Average price for an apartment condo was sitting at $201,012, which was up 0.67% from last month. And this is saying up 10.54% from May of last year. I'm a little skeptical of those numbers. Could have been some more expensive apartments selling, but I can tell you it doesn't feel like apartments are up 10% in the last year. That's not my experience, at least. Now, inventory levels, you can see there was 1,340 active listings at the end of the month, and there had been 461 sales. So first thing I want to point out with that is you can see that this is a much bigger market than semi-detached and townhouses. There's a lot more inventory in this market. There's a lot more product out there than those two. So the inventory is growing as well. It's up 6.69% from last month, and the sales were up just under 2% from last month. So they're both growing. Average days on market was sitting at 43 days versus 42 days last month. So staying relatively steady, but that's significantly higher than what we're seeing for all the other property segments. And I can tell you from experience that apartments don't typically get a flood of buyers. Sometimes with a detached home or a half duplex or something, if it's priced right, it's attractive, doesn't need a ton of work, those properties can get sometimes dozens of showings in the first few days. I have never seen that happen recently with apartment condos. Even if you're the best priced property in the building, you're priced right at the comparable sales, you might be lucky to get 1 or 2 showings a week, and often less than that. There's just not nearly as many buyers out there buying apartments, at least compared to the inventory levels. 461 sales. I think that was higher than the semi-detached and maybe somewhere close to what there was for row house. I think row house had... Yeah, no, that's more. Yeah, so there's technically more people buying apartments than there are townhouses, but there's just so much more inventory of apartments that it's a much different experience. But yeah, with my listings that are apartments, they don't get nearly as many showings as the other property types, and you have to be a little bit more patient. You see that the average days on market was sitting at 43, so that's 10 to 20 higher than a lot of other properties, and that's only counting the ones that sell. So keep that in mind too. If something just sits on the market for months and months and months and never sells, that doesn't even go into the average days on market calculation. They only get counted if they sell. So keep that in mind as well. There's a lot of apartments that don't sell. Most of the apartments under 200K, so that's 63.17% of the market. Between 2 and 300K was 28.81% of the market. And between 3 and 400K was 5.15% of the market. All right, let's look at benchmark pricing. In May 2024, the benchmark pricing for apartments was sitting at $189,700, which has been having a pretty good run recently. It's pretty close to June 2019 prices for apartments. As you can see, just looking at the history here, it's been a bit of a rough few years for apartments, kind of going up and down. I'm personally a little bit surprised by this result and showing that the market prices for apartments are going up, because it's still been a balanced market. It probably has more to do with the specific type of apartment that they're benchmarking here. I'd have to pull the description. I can dig into that into another video, but I'm a little bit in disbelief by that increase. I know some apartments are doing better than others, but it doesn't feel like we've seen a bunch of price appreciation, to me at least. It could be just that some nicer units are selling that didn't sell before, that kind of stuff. But overall, this does look promising for the apartment owners out there. A lot of people have been waiting for there to be some kind of rebound in apartment prices because they have been depressed for quite a while. So kind of weird that the apartment prices are going, like appear at least on the benchmark price, to be going in an upward line like that when they're the one market segment that is underperforming in terms of balance, with it being more of a balanced market versus a seller's market. So I'm a little skeptical of those numbers. My experience with listing and selling apartments is you're not getting a ton of showings, and it still needs to be priced really well. So I just don't really quite believe what I'm seeing here. But it could just be that the type of apartment that they're tracking has been doing better overall and hit some lows. But yeah, so that's kind of where we're at with apartment benchmark pricing. If you're looking at buying or selling a home in 2024, you need a real estate agent that is aware of what's going on in the market and keeps on top of things. I hope I've demonstrated that in my video here today. And if you've been watching me for a while, you see I do tend to geek out on this stuff, but I'd like to offer you an opportunity for a free consultation call with me, whether you're buying or selling here in the next year or so, or even right away. You can reach me at 780-819-5508 to set that up, or go to booktrevornow.com, and then you can just select a time on my calendar and book a free 30-minute consultation call.